Good evening, everyone, and welcome to our Portfolio Reports webinar. My name is Susie Ertzberger, and I'll be your hostess tonight. Our wonderful presenter tonight is Ann Cuneaz, Better Investing Senior Manager of Education. She is a longtime Better Investing member, volunteer, staff member, and is involved in developing educational initiatives and programs such as Stock Up, First Cuts, Ticker Talk, and any other webinars that help BI members become successful long-term investors. She's my partner in crime here in developing the online tools, and we're lucky to have her presenting tonight. So over to you, Ann.
Well, thank you, partner in crime, Susie. Yeah, we are here talking all about portfolio reports today, and we've got, as always, a full agenda. So let us get started. Quick disclaimer, guys, I always have to remind you that everything we're talking about here is for educational purposes only. You will see some tickers, you will see even some recommendations on some of these portfolio reports. Ignore those. You must do your own research. I may own, in fact, I'm just going to say right now, on the demo portfolio, I own Microsoft. I think that's the only one I own. So that's taken care of. The presentation might contain images of various websites or products or services not endorsed. Geez, I don't think this one does at all, does it, Susie? But if we go to a website, doesn't mean that just mentioning it is not a formal endorsement. And as always, we're recording this session, and it will be available in the video learning library tomorrow. All right, so as I said at the beginning, tonight we're going to talk all about the portfolio reports. And this is really an overview of all of the reports, an introduction, if you will, to our three main flavors of portfolio reports. We've got the portfolio summary report, a diversification report, actually two. We've got two versions of the diversification report, one by sector and industry, and the other by company size. And finally, we will take a look at the PERT report. And PERT stands for Portfolio Evaluation Review Technique, which you might understand that's why we call it PERT, because that's a very long title. We do have Susie in the background, and Marcia Cooey is here helping us out as well. Please do submit your questions. They will either answer them in the back room, or some of them will be served up for me to answer live. So before we talk about portfolio reports, it's really imperative that you set up a portfolio. Now, if you don't know how to do that, I'm not going to talk about that tonight, but these are the resources that will help you do so. 2 weeks ago, Susie did a wonderful presentation on managing studies and portfolios in the online tools. That gives you a very complete, detailed look at how to set up a portfolio, how to edit a portfolio, everything you need to do. That's in the video learning library, so check that out. There is another one, it's a little bit older, from July of 2021. It was a ticker talk. It's a shorter segment. It's like a 15-minute kind of just getting started. So maybe that's more to your liking because it is shorter. In addition, the Portfolio Quick Start Guide that is part of our handouts here tonight is a wonderful reference for you to see the steps involved in setting up a portfolio, editing, etc. It's always available on the Help and Information tab, but we're making it easy because it's here tonight, and it will be also on the video page when the presentation gets posted. All right, so let's start with a couple of definitions. You know, when you think of a portfolio in our online portfolio tools, you can think of this as a container for a collection of your stock selection guides. These are studies that you have saved in your library. It's just a way for you to organize your stock selection guides into, hopefully a portfolio that has meaning to you. The portfolio reports are very useful because they summarize the information from all of your SSGs and they help you monitor, fundamental performance, expected return, diversification, but for the portfolio as a whole. So you're looking at the big view. Our portfolio reports that we have in the online tools, they do not track the realized or unrealized returns from stock holdings and transactions. This is not a replacement for your brokerage statement or other tracking software you may use. So I just want to make that clear. So to access, it's very easy. Hopefully you know from the Better Investing homepage, we've got a gray box there titled Online Tools. It's the My Studies area that you want to go to, and so you can click on that big button. If you're already in the tools, just click on the little file folder icon, and that will take you to the My Studies page. So here I am looking at the My Studies page. You're going to navigate your portfolio to the one that you want to work on. So I'm working on one called Demo. You click that to select it, and down below then you see the stocks that make up that portfolio. And we see that we've got 11 stocks in this portfolio. Now looking at the buttons that you have to the left, we call those action buttons. And the reports are accessed through this button. It looks like a little piece of paper there with a little corner folded over. That's how you go into the reports. It's just that easy. So adjacent to the portfolio you want to review, click that button and I will get all the reports for Demo. Now, just a reminder, it's always best to refresh your portfolio data so you're looking at the very most recent information before accessing the reports. That's this button. Refresh the portfolio data. That will give you fresh prices. All the data, the underlying data will be up to date. So here we are. When you click on that portfolio reports button, this is what you might see. Here's our report options up at the top, and we're actually looking at the first report. Get into that in just a sec. Let's look at those options. So the first one is the summary report. These are our three flavors of reports. The summary report is available to all of our tools subscribers, Core and SS and Plus subscribers. The PERT and Diversification Reports, these are available to SSG Plus subscribers only. So if you're a Core SSG subscriber, you will only see the one button and that's all you have. But I'm just going to say it's a great place to start as you're learning. It's a good one. All right. So also I want to point out that you can tell which one you're looking at because the button that you have pushed turns green when you are displaying that particular report. All right, well, let's take an introduction, quick introduction to the summary report. So really what we're looking at for this report is you get one row of data for every stock in your portfolio, every one that you have added to the portfolio. You're also going to get a set of metrics for the total portfolio displayed at the very top of the report. The report data comes from your saved SSGs. I'll probably say this multiple times, but it's so important. That's where we're drawing the data from. We're not making this stuff up. It's from your saved SSGs. And the valuation metrics that are displayed on the report, they reflect your judgments. And while it is not required, it is highly recommended that the SSGs in the portfolio are complete, meaning that all your forecasts have been made. This is necessary to see all the columns to be populated. If it's an incomplete SSG, it'll still list a line, but some of those columns will just be dashed. They won't have any data in there. You'll be alerted if some of your data is a little old. Anything older, stock prices that are older than 7 days are displayed in red. This is a great report to review maybe monthly after you've updated your SSGs. That kind of coincides well with an investment club schedule Or maybe if you're an individual investor, you have a monthly routine to take a look at your portfolio. Once a month would be great for this. And I like to use the summary report as a bit of a source of buy ideas. If I have some cash I need to deploy as investments, sometimes I want to go shopping in my own portfolio, and I'm going to use this summary report to show me where the best places to put that money might be. All right, so there's the summary report. I know it's kind of small on your screen here. I'm going to blow things up as I can, but you do have the slides in the handouts, and when you're looking at a PDF, you can always enlarge those and really get a good view. I'm pointing out here that the portfolio totals are displayed at the top in this red box that I've got here. Now I did blow that up a little bit, so make it a little bit easier to read. So this is telling me that overall for the whole entire portfolio, I have about $57,000. And then it also reports a weighted average for the upside downside ratio and the total return. So overall, I can expect this portfolio to return about 13%. If you look carefully at the data, and we'll get to that, some are higher, some are lower, but the overall total return for the portfolio as a whole is about 13%. Now, the bulk of the report, the main body of the report is all about the stock data. So you've got one row is displayed for each stock in the portfolio. And as I said before, most of this data is coming directly from your stock selection guides. Everything here in red, these are straight out of the SSGs. If you were to open the SSG, put it next to this report and compare the numbers, they would be identical. Now this green in the middle, this is your portfolio data. And you enter the number of shares you have for a particular stock in a portfolio when you set up your portfolio. So that's where that comes from. And then, of course, the total value and percent of portfolios are calculated for this report. Oh, one other feature I want to talk about is this little PDF icon here. That's the icon that you would use if you wanted to create a PDF of the report, to save it, to print it out, to share it with your friends, your investment buddies, your investment club. This is the same on all of the reports, so I'm only going to mention it here. It is up in the upper right-hand corner of all of the portfolio reports. On this report, you have the ability to sort the rows. You can sort them by anything. By default, they come in by company name, alphabetical. But anytime you see these little double-sided arrows, that's an indication that you can sort these. Once you hit it once, it sorts it in one order, and then you can click it again, and it will reverse that sort. So this is one way I do like to use it. I'm sorting on the percent of the portfolio just to get an idea of what are my largest holdings versus what are my smallest holdings. I want to know how things are divided up there. So that's a great little tip. Now the right side of the SSG really has all that valuation data from the SSG. Such as your buy below price, your sell above price, your upside downside ratio, total return, and the buy, hold, or sell recommendation. Straight out of the SSG, and it's a nice summary for all of the stocks that you have in the portfolio. Now here, I am using the sort mechanism again, and I've sorted by total return. I also like to do this quite a bit because this is telling me, well, these are the ones at the top are ones that probably have the best expectations. These are the ones I expect the most return from. At the bottom, well, those are a little bit shy. They're lacking a little bit. So that's another piece of information that you are going to want to pay attention to. I mean, that's basically it. There's nothing else to the report. I encourage you to use it. Now, I made this slide just to give you some thoughts about this sample portfolio, this demonstration portfolio. So just looking at this data, you might consider buying from the top. Remember, we had a 13% total return. So if I have 20+% total return, well, that would improve the overall return of my portfolio. I might consider buying something from maybe these top 4 holdings. But if I look over here at the percent of the portfolio, I see that, well, one of them is 12%, Exos Financial. Well, since that's a pretty full holding, 12% is a pretty good size, I might not be so inclined to add to that piece of my portfolio at this time. I'd be more interested in maybe ACMR or SMLR or AMPH, since these are smaller holdings with a high return. At the other end, you might have a discussion about selling Netflix. According to this SSG, it's only going to return a 3.5%. And also, it's a decent size of the portfolio, so that's a bit of a drag. So you might want to look into that. This last point that I'm making here is really important because I don't make any decisions based only on this report. This is my trigger to look a little bit further, but always look at your SSGs, review those, make sure if you're buying something that quality remains high and the forecasts you made are still reasonable. On the low end, you care less about the quality, and checking your forecasts, obviously, to make sure those are still reasonable. And really, is it only going to be returning that much to me? Maybe I need to sell it. But it's really important to review your SSGs. All right. Well, we're going to move on to the diversification reports. Bit of an introduction here. As I said earlier, this is available to our SSG Plus subscribers, and there are 2 versions available. One is that we present a report, diversification by sector and industry, and the other is diversification by company size. We provide the data in 2 formats, in a table format and in pie charts, both. This allows for quick analysis of the diversification. So depending on what kind of person you are, if you like numbers, you might like the table. If you're more visual, you might like the pie charts. You have it both. Some general guidelines for diversification. These are high level, folks, but we do like you to have holdings in a portfolio that represent multiple sectors. I put here at least 4, 5, 6. That is a good number for a broad representation of the economy. That is part of what diversification is all about. So you're touching multiple parts of the economy. So if one part kind of goes bad, you maybe have something else that is still performing well. Also, Better Investing recommends that portfolios be made up of about 25% small-sized companies, about 50% medium-sized companies, and about 25% large-sized companies. The reasoning behind that is simply that small-sized companies, we tend to have higher expectations, higher growth, but comes with a little bit of extra risk. Our large companies, we might tolerate less growth, but they stabilize. They're steady eddies. They stabilize our portfolio. And that middle 50%, medium size, they're the workhorse of our portfolios. They're just growing and, doing their job. So this is a recommendation, a goal to shoot for. So here we're looking at the diversification report. And you can see that because diversification is green on my screen here. We are looking at the sector and industry diversification report. And this is the table. So it's a lot of, text, but it's basically breaking up all the sectors that I've got in this portfolio by what industries are represented and what securities are part of that. And you can go down like communication services, for example. There's 2 industries represented in that sector with 2 different stocks. The same for healthcare and the same for technology. You get the percentages over here by security. These are the same numbers that we saw on the summary report. By industry, percent by industry, and percent by sector. And that's good. All the information is there. But I personally like the pie charts. So scroll down. It's just right below this on the same page. Scroll down to view those pie charts. And we start out with the sector pie chart. So here's just a nice picture of all the sectors that are represented and how big of a piece that is of our portfolio. Also, if you scroll all the way down at the bottom of the page, you will see a box that's called sectors not represented, which can be handy if indeed, you see something that maybe you want to have. Maybe you have healthcare not represented, but you know that healthcare is a growth sector. So maybe you want to add that when you have an opportunity. These 3 that I have here, it's not unusual to not have those represented in better investing type portfolios because these generally aren't considered to be growth sectors. But 4 to 6 to 8, I've got 8 here. That's wonderful in my example. Next, we look at industries. And so here we still have those same sector breakdowns, but also we see the industries. So this is technology. 2 pieces, software infrastructure and semiconductor equipment and materials, with the software infrastructure being a much larger piece of that compared to the semiconductor equipment. Same over here with, this was communication services and healthcare. Excuse me. Going on down to the company distribution. Again, this is the same numbers that we saw in that summary report, but everybody loves a visual view, I think. And this can just tell you quickly at a glance, well, Microsoft, Lululemon, those are both very larger, not very large, but larger parts of my portfolio that at this point I might not be so interested in adding to. ACM, small slice, maybe it's a new holding. That might be one I want to build up. So very useful. The other way to look at this report is by company size. Now at the top here, when you click on this little drop down arrow, you're going to get this menu. Simply click on company size, diversification report to see what you're viewing here. And so here, this is dividing everything up into whatever size bucket it belongs into. And it defines things here, in case you can't remember, that our small companies are less than $1 billion worth of sales, and so on. And I see that I've got the companies named in each grouping, and the last fiscal year sales, market value, percent of portfolio, and a total for that company size classification. The one thing I like about this table is I like to look at this column here, this last fiscal year sales, because while all of these are small companies, some are small and one is really, really small. This Similar Scientific, this is a very small company. So I would want to keep an eye on that because sometimes small companies lose their way a little bit. So you'd want to keep an eye on that. In a similar way, you can see in the large companies, these are all large. They're all more than 10 billion in sales, sure. But Netflix is pretty teeny compared to Microsoft and Alphabet. So you can just see, do we have a company that's on the verge of moving to a large? Yes, we do. Lululemon is getting ready to move its way into the large category. It's just another piece of information consolidated in one place for you to see. let's check out that pie graph real quickly. And here, whoops, didn't mean that. Here we have the color codings. So the large companies here, this is the whole pie, which is, I don't remember what percent, but I didn't really do this on purpose, guys. I didn't try to figure out how I could get 1/3, 1/3, 1/3. It looks that way though. It was a happy accident, I guess. Anyway, this is the large, and you can see the contributors of that, who's contributing what, the medium-sized companies, and all those small companies. Visual. These don't take you, they take you less time to check out than it took me just to talk about. So check out the diversification reports. All right, next up is, you know, a little more complex report. It's called the PERT Report, as I alluded to earlier. Again, this is available to SSG Plus subscribers. And it consolidates, like they all do, information from your SSGs for all stocks in the portfolio. And there's that reminder. I am very repetitive on this. Refresh your SSG data always. So the PERT report adds an analysis element to the mix. This report provides information for not only valuation, but also for quality. And when we talk about quality in the context of this report, we are comparing the growth of the sales, pre-tax profit, and earnings per share, the recent growth, to the judgments and forecasts you have made on your SSG. And the question that the report helps you answer is, are these companies meeting our growth expectations? Yes or no? Obviously, for a quality company, we want that answer to be yes. You know, this is part of a defensive strategy to protect your portfolio from losses. Quality companies that not suddenly, but turn into maybe not so quality companies can be a drag on your portfolio. So you want to protect your portfolio from losses. Look at that quality. The other part that we're considering here is the valuation of the company. And here we're again monitoring the potential return of each stock, again, based on the judgments you have made on the SSG. These reports are only as good as your SSGs are. You have to have confidence in your SSGs to have confidence in these reports. Monitoring the value is really a part of an offensive strategy, again, to improve your portfolio returns. See if you can boost those up a bit by making some moves there. Here again, I recommend reviewing the PERT report quarterly. Quarterly is probably all you really need, because it's really important to have new data, new fundamental data that you can evaluate. However, monthly is fine too, and that coincides well with an investment club schedule. And they're not all on the same schedule, so different companies report in different months. So there's nothing wrong with checking it monthly. I'm just saying that quarterly is perfectly fine as well. So if you've never seen a PERT report before, some of you are going, wow, that's a lot of tiny little numbers. And it's hard to get it on this one screen. But yes, there's a lot of numbers, but let's break it down. It's really not that tough, because once again, we are looking at quality and valuation. So this left-hand box that I have boxed in here, this is all of our quality information, and that's looking backwards. That's seeing how have we done in our recent past. The valuation information is how do we think we're going to do going forward. We're looking ahead. So let's break this down and kind of see what we're talking about here on the PERT report. And we'll start here with some general information. It's all the way to the left. Doesn't take long to talk about this. It's basically your company name, It will list the dividend if the company pays a dividend. It will also present that in a percent yield number, the dividend as a percentage of the price. And then there's another column here labeled estimated earnings per share next 12 months. I don't use this on its own. This is used to calculate some of the other cells, some of the other columns on the report. But just to make you aware that this is actually the most recent trailing 12 months earnings per share grown at whatever you have forecast the earnings to grow at on your SSG. Okay, so that's your guess. If your SSG performed exactly how you said at a 10% growth rate or whatever, that would be that estimated earnings per share over the next 12 months. All right, moving over to the quality information. So when I'm talking about quality, I'm talking about the fundamentals. And here we're looking at information for earnings per share, sales, pre-tax profit, and again, TTM earnings per share. These are all quarterly figures. This is an annual or a 1 year, not annual, but I should say 1 year's worth of data. TTM is trailing 12 months, most recent 4 quarters. This first column that I've circled here is called quarter end. And all you're going to see in here is a month and a year of the reported quarter. This column applies to all of these sections. So, earnings, sales, pre-tax profit, and the trailing 12 months. So this is the quarter that's represented for all of these, and then the year ago quarter. Always the 2 quarters, always the most recent reported quarter, or I shouldn't say reported, I should say the most recent quarter you have on your stock selection guide. So if it's not the most recent, you need to update your data. How many times is that? 5, 6, I've said it, I don't know. It's important. And then we always are comparing to the same quarter 1 year ago. So let's take a look at the details for the earnings. So here's our quarter, so we know what quarter we're looking at. This dollar column, well, that's easy to figure out. That's simply the dollar amount of earnings made in that quarter. This percent change is a calculation that it may be obvious, but it's the earnings per share quarterly percent changed as compared to 1 year ago. In this top example, we see that it's negative 37.6 and it's highlighted. Well, I didn't do that. That is a screenshot. That is from the system. The PERT report will highlight in pink if any of these earnings or sales or pre-tax profit results are below our expectation. So of course, negative 37% is way below our expectation, and the rest of these must be above what we have on our SSG for our earnings per share growth rate, because none of those are highlighted in pink. We use a similar format. I'm not going to go through it on all the categories, but it's the same format for sales, pre-tax profit, and the trailing 12 months earnings per share. Now, I do want to take a brief look at the pre-tax profit section because there's an extra column in here. So these first 2 columns, they're the same as what we just looked at for earnings, same format. But this sales, percent sales, what is that? Well, actually, it's the percent of pre-tax profit as a percentage of the sales. That's our profit margin. So we see the annual numbers in section 2, under evaluating management on your stock selection guide. That's what these numbers are talking about on a quarterly basis. So here, and I've given you the equation, but I like to just look at the trend to see if the most recent profit margin is about the same, maybe a little higher than the year ago. Well, in this case, with a drop down of profit margin and earnings, yeah, no, something happened in this company. But this one, way up, nice, about the same, good, again, up, all those look great. Okay, so I like to take a look at those trends for a little bit more information. So these alerts, we do have these quality alerts, which I've already kind of highlighted. So the pink does indicate that the percent year-over-year change is actually less than what you have forecast on the SSG. That means that this company, if you see pink, is not meeting your expectations in some way, depending on what's highlighted. We compare to the earnings per share growth rate. We compare the earnings per share quarterly, the pre-tax profit quarterly, and the trailing 12 months earnings per share. All three of those compare to the earnings per share growth estimate. Of course, sales compares it to the sales growth estimate that you made on your SSG. And just so you think that, there's nothing wrong with no highlighting. No highlighting is wonderful. No highlighting indicates that, this company is meeting all of your expectations. They exceed the growth rates that you have on your stock selection guide. So, as I said on the previous slide, you need to investigate these pinks. Just like on the portfolio report, no, summary report. This is a PERT report. They're all portfolio reports. Just like on that report, you can click on any of these rows to open the SSG. So I would definitely want to take a look at this stock and see what's going on. Do some research. All right, let's move over to the valuation side of this report. There's a lot of numbers over here too. Most of them I ignore, frankly, but I'll tell you which ones I like. But anyway, the valuation information does help us identify stocks that are undervalued, meaning they might be potential buys, or overvalued, potential sells. Again, if the SSG is not complete or the calculation is not meaningful, then some of the cells will contain dashed lines. I mean, we're not going to make up numbers. If you don't have those numbers on your SSG, we don't know what to do with it. So we just put little dashes in there. So reiterating that the data comes directly from the SSG for all of the columns that I've put a little red asterisk there. So price, high projected PE, low projected PE, earnings per share growth rate, upside downside ratio, total return, estimated low price 5 years in the future, estimated high price 5 years in the future. All this data is right from your SSG. The remaining columns, this data is calculated based on data that you've got in your stock selection guide, but it's calculated behind the scenes and you aren't going to be able to find a matching number on the stock selection guide. Now, how and what is being calculated there is really a little bit beyond the scope of this class, but I know some of you are very, very, very interested. So I leave you with this reference. We have put together a PERT calculation reference guide, and it is available in our help and information section. So you click on that question mark there, go down here to this reference materials, and it's listed right there. It's a two-page report. You can print it out. It's a PDF. You can download it, save it on your computer, and it will tell you for every single column on the PERT report, the name of it, what category, is it general, is it quality, is it valuation, the definition along with any equation if it's applicable, and an alert indicator, again, if applicable. All right, but let's talk a little bit about those alerts. Okay, once again, anything older, any price older than 7 days is indicated in red. Time for an update. That must make 6 or 7. And then there's 3 columns that may have yellow highlighting. Projected relative value is 1, and it is highlighted if the value is less than 80 or more than 150, meaning it's either wildly undervalued and you want to know what the market might know that you don't know, or very overvalued, in which case, beware. Upside downside ratio might be flagged yellow if the value is less than 1, and the total return is highlighted if the value is less than 10. And Susie, I'm not looking, but there's always questions about, can I change these numbers? I don't want 10%, I want 8%, I want 6%, I want 12%. As of now, no, you cannot change those. They are fixed. But frankly, how you use the information is up to you. This isn't like sell if it's 9.9%. No, you use the information. We're just highlighting it to bring it to your attention. So yeah, these are hard-coded into the program as of now. Once again, everything is sortable. There's all those little double-headed arrows. I love to sort by total return, and this is how I often do it. Just like the other one, you click it once and it'll sort it one way. In this case, it's showing me all the stocks with the least potential at the top. Click it again. Whoops. Click it again, and I'm going to see everything with a high total return rise to the top. So I use this one all the time. I pay attention to the total return along with that quality and my SSGs. So that's what I do. So the PERT report, there is a lot here, and I'm just going to give you a couple real simple usage strategies. So the first one is the defensive strategy. And this is to protect your portfolio from losses, as I indicated earlier. And just like the SSG, I always start with evaluating quality first in my portfolio, which means I'm going to pay attention to that, center part of the PERT report, the part that might show me some of that pink highlighting. And if I see any stocks that have pink highlighting, well, that's a signal to me that I need to go in and do a little digging, try to find out what is going on. I'm going to do some research to try to determine if the problems are temporary or are these more long-term in nature? Is this a bigger problem? We do have some other tools that you can use, such as the quarterly data report in the SSG. That's available in SSG Plus. You have other tools to see if this decline, this not meeting expectations, is a one-time problem. Is it a new problem? Or is it part of a longer trend? People often ask, well, how long do you tolerate bad information? Well, it depends. That's an it depends answer, but 1 quarter alone is rarely enough. I mean, I can't think of the last time I've reacted on 1 quarter alone. But if you see 2, 3, 4 more quarters of declining data, then that's a problem you need to act on. And the other part that I'm always going to take a look at when my stocks are showing pink on the portfolio, on the PERT report, is I'm going to review those growth forecasts on my SSG. And I'm going to ask myself, are these reasonable or are they still reasonable? Maybe they were, but maybe they're not. That only comes, your decision only comes with more research, and you might adjust those if necessary. What I would say is don't just adjust them to make the pink go away on your PERT. That is not useful. You want to evaluate it and come up with reasonable growth rates to see, what's going on with the company. So investigation. And then I put this caution out here, and this is the reason we evaluate our quality first. Because truly, the worse a company performs fundamentally, the better value it can appear to be. So you want to evaluate the value side of the equation for those high quality companies only. Don't look at the value and kind of give them a pass on the quality. It doesn't work that way. Our SSG does not work that way. And you might consider, I think you should consider, selling stocks that don't exhibit the characteristics we're looking for, that strong and steady growth in sales and earnings. The other part of the strategy, the opposite side of this strategy, is the offense. I want to improve my portfolio returns. I'm trying to boost my portfolio from that 13% maybe to 15% or better. Well, to do that, I'm going to consider adding to the quality holdings that are currently a good value. So a quality holding is telling me there's no pink on the quality side, unless, there's always a caveat, unless your research indicates there's a reasonable explanation for that pink to appear. Sometimes that's the case. Only you can judge that, but this isn't like no pink ever. I give you a pass sometimes, but make sure you think it's reasonable. And here again, you're looking for a high percent total return, generally more than 15%. But as I kind of talked through as I looked at our demo portfolio, at least more than the overall portfolio return as it is now. So you want to be looking for returns that will give you better than that, and for your upside downside ratio to be attractive at a better than 3 to 1. You can also improve your portfolio returns by reducing or selling some of your overvalued stocks. Those that might have a low total return, less than 8%, or 10% if you're paying attention to our highlighting, or whatever is your personal number. Upside downside ratio less than 1, that's not desirable, because that means that there's more potential downside than upside. And I don't like that. I do have a caution, however, to caution you to be slow to sell a stock that continues to meet growth expectations. These high quality companies, sometimes they do get overvalued, and you're tempted to sell, take your profits. And there's nothing wrong with that, but it's a high quality company. So you're saying to yourself, well, my intent is I'm getting back in when that comes back down. Sometimes we're not too sure when the right time is. I find that my experience has been it's just best to hold those through those periods of overvaluation, these high quality holdings I'm talking about, and add to those holdings during down periods. Now, if the stock has grown to an outside portion of your portfolio, it's done so well that it's ballooned up to 25% of your portfolio, or whatever number is too much for you, trim it, pare it back, so you don't have so much risk involved with that one stock. But again, slow to sell those great high quality holdings. So that's our high level overview here. These portfolio reports that are available in the tools, they do really focus you on the overall performance of your portfolio, and they can help guide you to higher returns. I love the summary report. I think it's an excellent place to start. And maybe if you're a core user, that's all you're going to have, but it's a great one. So don't overlook it. It's a great place to start. Use it as that shopping from your portfolio list when you have new cash to put to work. And one of our 4 principles is to diversify your portfolio. Diversification reports couldn't make that easier to determine how diversified you are. And finally, that PERT report does focus on the quality and the value for those investors wanting a more detailed view of their portfolio. So that's the overview. I haven't been reading them, Susie, but I see there's a few questions that have come through. Do you have anything that we want to address out loud here? We got a few minutes.
We have been keeping up with questions, but
You're
could you
awesome.
revisit how to find the reports again? Go right back to the beginning and revisit how to find those reports?
Sure enough. How about if I just take you right to, if I can get to it. How about if I just take you to the tool? How about
There we
that?
go.
And it'll be a live demonstration, folks. So here I am. I've already selected my demo portfolio. And so we see that these are the studies that I had that we all looked at to find the reports. So, well, I hope you know how to get here. Maybe I should review. How do I get there? Here I am on the home page. I'm logged in. I'm hitting my studies. Boom. Okay, this is a fresh my studies. I'm going to close this other one. Now, my little trick is this was the last portfolio I created. So I use this date created sort here. I click on my demo, that brings it right to the top. So I knew I wanted to do that. So there's my demo. I click on that. Then right here says reports, really teeny tiny. I should make that bigger. There, that's a little better. Right there. Click, and here I am. Oh, look, I've created this report a week ago when I was putting this together, and look at how out of date some of these things are. So I should refresh my data first thing. But here's my summary report. Here's my, well, I'll go in the order I went in. Here's my diversification reports. Scrolling, 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 scrolling. Sectors not represented all the way at the bottom. Second diversification report, which is by size, I should say. Okay, it's much shorter. PERT report, bit of an eye chart, has a scroll bar at the bottom when things get a little wide. And that's how I got to those reports.
Very nice.
Okay. What else have you got for me, if anything? Maybe you've done a
really
great
don't
job.
have a lot for you. We've had
Wonderful.
some in-depth conversations with certain people, but I think they're all set.
Excellent.
And any last questions? Get them in within a minute here, guys, and we'll bring them up. But you did an excellent job, Ann. And there is the email for ongoing questions, which if our call center staff cannot answer, they will be routed to either Ann or I, and we'll answer them for you.
Indeed, we will. All right. I have nothing else to add. I was just going to say what you did. More questions right there. We do have a survey at the end. We love your feedback always, folks, to know what you liked, what you didn't like, what you might want to look at in the future. We love to hear it all. All right.
Great. Thanks, you, Ann, and thanks everyone for coming out tonight.
All right. Well, thank you, Susie. And thank you all for joining us. Good night.
Good night, all.